Well, we ended crypto spring in June, I think. I think it was kind of, last June 15th where we had the bottom. Then we had another interim bottom after the FTX debacle. And then, this year, June 15th, I think, to me, was the trigger. Now, people look at it and say, oh, but we had this big rally from December of last year into June. So isn't that the rally? Well, that, to me, that's just the beginning. Kind of that got us back to even over the previous year. And now I look at where we're headed in a crypto summer. Now, what does crypto summer mean? Well, it's where the attention of the markets kind of shifts toward this halving event. In this period between now and the halving, I think we drift upward towards fair value. What's fair value? I will argue, based on a Metcalfe's Law model, fair value for Bitcoin is around 55K. So I think we drift upwards toward that level. But then the punters are going to come, right? If we go from 30 to 55, everybody's going to say, oh, we're going to the moon again. We're going to throw out the multi-$100,000 targets. And we probably will have a speculative blow-off top sometime in 2024 that leads to the next downturn in us. So the way I think about it, and it's just my way of thinking about it, the 4-year cycle tends to run June to June-ish. So, we saw crypto spring June 22 to June 23, June 23 to kind of April, May 24 will be crypto summer. Then we'll get the blow-off top kind of from May of next year to kind of April, May of the following year. And then we start the next downturn sometime. Leverage will come back. My one thought, though, on that, Giovanni, is that the leverage in this cycle probably won't be as bad as the previous two, meaning there won't be as much leverage available. And therefore, the highs probably won't be as high. If you think about the 2 cycles ago, we went up 40-fold. Not a big move. Then last cycle, we went up 20-fold. This cycle, I think, probably more like 10-fold. And we're already up 100%, so that leaves a 5x from here. So could I see a price in the 150 range? I've said for a long time, actually for over a year, that no one else was going to get approved for the ETF. That the Winklevoss twins and Arca and DCG, all these guys were making the application like they're going to get stamped rejected. So the only person I saw that had a shot was BlackRock. He was like, what? I'm like, well, because they're part of the group. I mean, they're part of the incumbents. And so, shockingly, they released their application. Now, coincidentally, with the beginning of what I deem crypto summer, BlackRock shows up and says, hey, we want to do an ETF. I think it will be approved. I don't know when, right? But my guess is, sometime in Q3 or early Q4. I think that is going to change some of the dynamics of this crypto bull market. And the reason is just supply and demand, right? There's a whole bunch of people who aren't going to sell at any price, and demand is going to rise if a spot ETF is approved. And it's, to me, the antithesis of what happened in November of 21 when they approved the futures ETF. And from that point, prices just went down. Well, why is that? If there was a futures ETF approved, why didn't that increase the price of Bitcoin? Well, because futures ETFs do the opposite. They actually allow banks and other large speculators to short the price of the asset, because you can create a paper asset out of thin air. And you've seen it in the gold markets, you've seen it in the oil markets, you've seen it in the commodities markets. Now we've got the onset of what could be not just tens of billions, but potentially hundreds of billions of demand from people who trust BlackRock, right? There are a lot of institutions, they just trust Larry and BlackRock, and they will buy this asset. BlackRock is applied for 576 ETFs. They've gotten 575 approved. They've only lost once. I'd say the odds are way higher than 51-49. Look, I think it's a done deal. I think it's been a done deal for years. They've just been waiting for the right time. I actually think it's going to be approved. But, I never say 100% because things can happen, but I'd say 51 is very conservative. What blockchain technology does is it basically disrupts financial services the way the internet disrupted media and commerce. Now we have a third ledger, an immutable, trustless, truth ledger that says 100, 100, 100. Everybody agrees it was 100. There's no fraud. There's no malfeasance, and you don't have to trust me anymore. In fact, we don't even have to know each other. We can just transact peer-to-peer globally, instantaneously. No more gold in a vault, no more money being printed. It's a pretty glorious future, but the incumbents are like, whoa, wait a second. I don't like that. I like my $7 trillion a year, my 6 to 8% of global GDP. That's good for me. So it's not surprising at all that the regulators would rig the system such that they don't approve the disruptors coming into the party to take some of that $7 trillion. Well, now BlackRock, which is part of the group, says, hey, we want to take the 1% fees every year, not, DCG and the other disruptors. And now I think what happens is they say, okay. And so should we welcome them? Not really, right? But should we be happy that we get a better functioning system and ultimately we strip some of the costs out? And so we win a little bit? Sure. And will people, the hardcore maxis, they'll hold their Bitcoin in self-storage, self-custody, put on a ledger, which we love because we own a piece of ledger, and everything's happy. But for the average person who has never, like my dad, never going to hold his own keys, just not going to do it. He's perfectly happy at Coinbase. He'd be perfectly happy to buy an ETF. We need these CeFi, these centralized finance structures, as a bridge to the beautiful decentralized future. So that's a long-winded way of saying we shouldn't celebrate them, but we should welcome them, and we should be happy that more participants will now enter the digital